Hey guys, welcome back. It's been really a long time. I think almost 5 weeks or more, if I'm not mistaken, since I uploaded the video. And I'm grateful for you tuning in again. It means a lot. And thank you for my dearest subscribers. Well, we're back now, and there's nothing stopping us. So, as our custom is, we do market review almost every weekend and the weekly forecast. So I'm going to be showing you the trades I took and how you could possibly take the trades that I did not take and why I did not trade in some certain days. And also I'll be showing you what I'll be expecting in the next week. So if this is your first time joining this channel, make sure you subscribe and like the video and also comment something nice. I'll be grateful because we are going somewhere higher, right? So I believe your week have been fine. I Some people spoke to me and were like throughout their week they did not make any profit, or they had this certain this sort of fear that they could not push any buttons. Well, those kind of things you need psychological help. Okay. I'm a guest tutor for those of you that are in the Telegram channel. I'm a guest tutor in an upcoming Forex training where psychology classes to be held. So if you want to be part of the class, you can check the comment section of this video. Check the comment section. You see my Telegram name pinned in the comment section. Like I have only one account, only one Telegram account, so you don't get scammed. So you see it pinned on the comment section. That's how you can reach out to me if you want to be part of this forex trading, which I'll be a guest tutor. Okay, so let's go back to the video, right? Well, this is Nasdaq. As you know, Nasdaq is everything we trade. And if you're looking at it from Monday till the end, Friday, this is a week's data. Now you can see the manipulation fees to the upside and the distribution fees. You can see how price accumulated here for long, even to the afternoon of Monday, then starts manipulating to the upside before distributing. Although the distribution started late, which was New York afternoon of Thursday. That was when the distribution started. So we could not come back for Monday low. The weekly cycle is something that once it takes out a liquidity, I am on the manipulation phase, it comes back, it starts distributing very, very high, like very, very heavy. It starts pulling very heavy, and it comes back for the Monday low, like where the candle started. So in this case, Monday was bank holiday, and almost almost every week after NFP, that NFP week where we don't trade on Thursday and Friday, the coming week there's always a bank holiday. That bank holiday could be on Tuesday or could be on Monday, but the coming week there's always a bank holiday, right? So there was a bank holiday on Monday. That means we are not supposed to trade that day. For those of you who are my students, and me, of course, I don't trade on bank holidays. The price action there is very, very unpredictable. So now on Tuesday was a trading day. On Monday, I'm sorry, on Wednesday was FOMC, and this is part of my rules. I rather avoid FOMC like I avoid NFP. Like I avoid FOMC totally. I don't want to go there. I don't want to gamble. I don't feel like I know what I'm doing. I just want to avoid FOMC totally. So there are some people who trade FOMC profitably. Yeah, that's not a problem. Just to my own rules, I don't trade NFP and FOMC, right? So I trade CPI, of course, and the last day, which was Friday. So the only trading day was Tuesday, Thursday, and Friday. But out of these 3 days, I traded only 2 days, which was Tuesday and Friday. Well, let's take a breakdown and see how I took these trades and how you could possibly take these trades in case they happen next time in the future, right? That's why it's a review. Okay, so first we'll be looking at Tuesday. Okay, so this was Monday's price action. You can see that there, and this is Tuesday's price action. So no confusion, right? Now, according to the weekly cycle, or let me say the daily AMD. Now, according to the daily AMD, I taught in this channel, right? I said in a new day, what should you be looking at? If you're looking for price to open, that's on the midnight, the New York midnight, which is 12 o'clock, and do what? Manipulate to previous day drawn liquidity. They start kicking higher. What do I mean by that? I mean, if that day is bullish and price opens at 12 midnight, what you should expect is price reading a previous day drawn liquidity, right, before pushing higher. If it's bearish, you expect price reading a previous day drawn liquidity before pushing lower. That's a footprint of what price does every day and every week, right? But in this case, you can see we had a previous day favor gap here, and price did not reach for that, but it kept on pushing higher. Now, some of you, this is new to you because it's very confusing. Why did price not reach for the previous day value gap? Now, let me bring this down to you. Reaching for a previous day value gap is what you expect price to do, yeah, but it's not compulsory, because sometimes, just like you expecting price to reach for the current day fair value gap, which is what the intraday AMD setup, you can also expect price to read the current day sell side liquidity or the current day buy side liquidity. Hope you understand what I'm trying to say. Just like you expect, you trade the intraday AMD setup. I'm sure most of you are familiar with the intraday AMD setup. I think the video or the lecture it is on this channel, so you can go and find it. You expect price to trade into that current day favor day gap and move on if it's avoiding the previous day drawn liquidity. That's exactly the same thing you should do when price has a current day sell side liquidity or a current day buy side liquidity. In this case, there was a current day sell side liquidity and a previous day favor day gap. So what price do? Price instead, you can see, used the current day sell side liquidity and ignored that previous value gap. Now, it's not in your own power to push price or to tell price what to do. You only look at what price do, follow price and react. You only follow price. Be like an indicator in the market. For those of you who have used indicator before, you know that indicator follows price action. Whatever the price action is doing, that's what indicator is doing. Now, be like an indicator. Follow price action. Whatever price action is doing, that's what you should be doing. Don't be doing otherwise. That's where you get it wrong, right? So if price intended to come further to the previous day the value gap, then fine. But in this case, price took out only the sell side liquidity, and it's giving you what entry pattern, the inverse fair value gap. You can see that in the heart of New York. So if you were expecting price to do what, let's say give you a OTE or coach or some of all those things, you can see that you would miss entry here. It's very, very important that you know these things. I'm going to elaborate more on this inverse fair value gap. Maybe with a short or something, I'm going to elaborate more on this inverse fair value gap. Now, your eyes should be here once price is coming back, because price already swept a short-term low. You can see sweeping a sell side liquidity and also taking out a short-term low before rallying. Now, what you're expecting is either a fair value gap, a 5-minute fair value gap, or price breaking this inverse fair value gap. Why is it inverse? Because you can see none of the candles here is respecting that fair value gap. If this candle was respecting that fair value gap, then it will not be an inverse fair value gap. If there was anything here respecting that fair value gap, it will not be an inverse. But you see, nothing is respecting it. So price will drop into the inverse fair value gap most times before rallying. And this drop sometimes can be just a week of a candle, and that will be your entry. Now, how did I pick this trade? Immediately I saw that drop into that inverse fair value gap, that was my entry. Stop loss were just at the last zone where it's efficient. Now I'm okay to put my stop loss there because there's no fair value gap for price to reach for there. All of these zones are efficient and price swept a short-term low here. So that's like indicating the start of a trend. So once price breaks that inverse fair value gap, trust me, if you're not fast enough, you could set a limit order at the top of that inverse fair value gap so that price will just tick you. Sometimes you could just miss. But that's why I like using the market order. Okay. So if you see that once price the next candle opens, it drop on that inverse fair value gap will push price to the next drawn liquidity. Right. So that was Tuesday's price action, and that was what I took on Tuesday. Okay. Now let's look at Wednesday. Wednesday was CPI, right? Wednesday was CPI. This is Wednesday's price action. Don't mind all of this. So this is my 1 hour time frame, and where the week started which was on Monday, was here. You can see this was where Monday opened. Just follow my cursor, right? Follow my cursor. This was where Monday opened here and rallied towards to this buy side liquidity. You can see that. So the manipulation phase was not just going to anywhere, it was going to somewhere. Once it arrived on Wednesday, it did what? It started rejecting on Thursday. You can see that precise. So this is the weekly aim. The price accumulates there, manipulates to the nearest buy side liquidity, which is that. You can see that equal, relative equal high. The price took on Wednesday, then the rest of the week will distribute. So of course it works, right? Now let's look deeply into Wednesday. Wednesday was CPI, right? And 8:30 was that for CPI. So this first rejection candle, this first bearish candle, was what was CPI. Now, what baffles me was that just immediately after that CPI, or just at that CPI, there were a lot of people shorting. A lot of people were selling from this point. A lot of people placed their sell order on here. You know what I mean? Like this is their demand zone or their supply zone or whatsoever. A lot of people placed their order here and they started selling. So when I went on Twitter and I saw a lot of this screenshot, I was like, wow, why do these guys always gamble? Trading the news. So people are profitable trading news, yeah, but it does not mean that you can predict the actual direction of the news. Of course, you predicted right. You wanted to sell, right? But look at what price did immediately after CPI. Price went ahead to take out this buy side liquidity again before coming down. So if you sold with CPI and price came back for your stop loss before coming down, that would be a very, very big disaster. You see. So in this case, what do you do? Now this is the original buy side liquidity. This other blue line. You can see that here is the original buy side liquidity for the weekly power of 3. Now, on that Wednesday, London session, price left with relative equal highs again. Not even relative, those are perfectly equal highs. Now, you don't sell below this kind of liquidity. You don't. Whether on CPI, before CPI, or after CPI, you don't sell below this kind of liquidity. Don't do that. So, once price dropped after CPI, you wait for price to take out this buy side liquidity, right? And once price took out that buy side liquidity, you could find a good entry to take your trade there. But the truth is, I did not take this trade on Wednesday. So like I said before, I'm not going to come here and tell you I took this trade when I did not take that trade. I cannot give myself such kind of credit. I saw the trade, but I did not take it because it was approaching launch. It was around 1:30, so it was New York PM, New York launch, right? So I don't know. I like the urge to take any trade at that point just left my body because of all of this consolidation from the heart of New York. So from 9:30 there was all of these consolidations up and down, up and down, and I wanted price to take out that buy side liquidity, but I became unsure. I became very, very unsure because you can see price took that buy side liquidity first year, went down, consolidated, then came back again and take that same buy side liquidity, take this high again. Now during launch time, which we're not supposed to trade, of course, price came down again, now consolidated and take out that same high. So it took out that high 3 times. This made me very unsure because I was waiting for after launch to take that trade. So after launch 1:30, I could no longer trust that trade, and that was when I saw the candles dropping so massive. I regretted, of course, I'm human, I'm not a robot. So I regretted not pressing buttons, but at the same time, I was happy not pressing buttons because maybe it would have gone against me. Okay, so that was Wednesday. Now let's look at Thursday. Sorry, sorry. That was Thursday. That was Thursday. Sorry, this was Wednesday's. Wednesday was CPI. Sorry, Wednesday was FOMC. What am I saying? Forgive me. Monday was bank holiday. Tuesday was a good trading day. Wednesday was what FOMC, and I totally avoid that day. So that's why I'm not going to be talking about FOMC because there was nothing I was doing there. It's like my holiday, just like NFP and bank holiday. It's like my holiday, stay off the chart kind of day you get. And this other day, CPI, which was Thursday, was what I just reviewed. Yeah, this was CPI Thursday. Now the last day, which was Friday. Now in this scenario, you already know where price is going to, right? You've gotten your weekly MD in check. That's what do I mean? You've understood the fact that price accumulated, manipulated to a buy side liquidity. So the rest of the week is going to be what, bullish. Sorry, the rest of the week is going to be bearish, starting from what, from Thursday. Now this is also a Friday setup. Some people will think Friday setup did not occur this week. No, it occurred because I told you on the Friday setup video. I think I mentioned something that always look for a heavily heavily trend week. So a week that is heavily bullish on Friday, expect price to return. A week that's heavily bearish on Friday, expect price to return. So in this week was a complete weekly cycle. Price accumulated, manipulated perfectly, and distributed. So we're expecting price to continue what Thursday was doing, right? Since we've already taken out an external liquidity, so we'll be heading backwards. So what happened on Friday? Once price opened, we have this buy side liquidity here, and during New York, price took out that buy side liquidity, and so very simple, the cleanest trade of the week. Very simple and less confusing. A previous day high was there, and price took out previous day high and sold off. Some of you in the community saw me took this trade, so it's not a big deal. Well, after price took out that price liquidity, most of you could not take this trade because let's say maybe you were in the 1 minute or you were in the 15-minute time frame or in the 1 hour time frame. So it's very good to be flexible with your time frames, right? It's very okay, very normal to be switching time frames, looking for where you could take possible entry. But for me, this is just like my own confession. For me, I'm very okay with the 15-minute and the 5-minute time frame for entries. Now, that does not mean I use the 15-minute for entries. No, I only use the 5-minute for entry. But there are some sort of confirmations I want to get on the 15-minute time frame before I go down to the 5-minute time frame to pick my entries. Now, I'm going to elaborate more on this on that private class. So if you want to join, there's a 20% discount going on for my YouTube students. Okay, not that I'm not going to talk about it here on the YouTube channel. Of course, I'll talk about it on the YouTube channel, but there are some things, there are some lectures I'm preserving for the YouTube channel, like until we get enough subscribers, like 2,000 subscribers, 3,000 subscribers, and ahead like that. That's when I'll keep on spinning most of this preserved premium lecture. But if you want to get them now, I'll be teaching them in that private class, which I'm a guest tutor in it. And if you're my YouTube student, you have a 20% discount to join. Okay. So how I took this trade was basically, in fact, totally out of experience because I've seen this kind of trade multiple times where price leaves what a volume imbalance. Like it's telling you that okay, price wants to come for that volume imbalance, or price leaves what a price does what an OTE on the 1 minute time frame, right? Now what do? You keep on waiting for price to return to the fair value gap so you can pick your trade. You miss this kind of trades a lot. You miss it. So you need to be very focused on inverse fair value gap and the unicorn entry. You need to be very focused on that. Those two entries are entries that happens on Nasdaq very often, right? So this was my trade, that inverse fair value gap on the 5-minute time frame. I was this volume balance was outlined, and this inverse value gap too was outlined, right? So once price broke through this inverse value gap and gave me this rejection, that was like okay, fine, that's price wants to respect that. So that was my sell. Okay, that was my sell, and this was how I took the trade. So you can see my sell was there just at the bottom of that inverse value gap. Take profit in the next drawn liquidity and stop loss in the next efficiency. I will not put my stop loss in this volume imbalance because there's a high probability of price reaching for that volume imbalance again. So I'll put my stop loss where the zone is invalidated. So price does not have any reason to come for this high. If there's any reason price needs to come back, it's for this volume imbalance because it's also a draw on liquidity where price could reject from, right? So this was all my trades for the week. That's on Tuesday, on Thursday, and on Friday. Now, if you're learning from me, you should understand that me avoiding these certain days is something that's I take it very discretional. Like I don't joke with avoiding days. The best traders know when to trade. You need to know days that are clean, days that will give you a clean setup, not days that will confuse your head and make you paralyzed on the chart. Right? That Monday was not a clean setup day because of the bank holiday. Last week, Thursday and Friday was not a clean setup day because of NFP. Now, Tuesday was a good day to trade. Wednesday was FOMC. Now, according to my rules, because I've backtested enough, I've studied enough, I found out that FOMC is not a safe day for me to trade with my own strategy. Now, other people there with other strategies, let's say SMC, price action, indicators, or whatsoever, will be happy trading on the FOMC day, but not me. I don't like trading on that day because I've found out the way I do this analysis is that I pick all the trades I've taken on NFP because I do this journaling and stuff like that. Maybe I'm going to make a video on how to journal with zero cost, right? So I pick all the trades I took on FOMC, and I found out that I have a incredible sorry, a very dangerous or stupid amount of win rates there, about let's say 20 or 15% win rate on any FOMC day. So what did I do? After my analyzing and my backtesting, I found out that okay, that's not a good day for me to trade. I cut it out, so I don't trade on FOMC day. CPI is always in the afternoon, so that's 8:30. After 8:30, the rest of the day I can manage to trade that. But FOMC is always in the evening. I don't know if you've noticed. FOMC is always like New York afternoon. So sometimes you see FOMC at 11 a.m. New York time. Sometimes you see it at 6 p.m. Sometimes you see it at 7 p.m. Sorry. Sometimes you see it at I'm using Nigeria time. I'm mixing with Nigeria time. Sorry. Sometimes you see it at 11 a.m. New York time. Sometimes you see it at 12 p.m. Sometimes 1 p.m. So what happens is that you could find a very good setup before that FOMC. But once FOMC comes in, it could do something unexpectedly, like just take you out or just start going against your direction. You know what I'm talking about. So that's why I decided to avoid FOMC. Now, if you want to become a profitable trader, you should try as much as possible to avoid these days like me and focus on those days that gives only clean setups. If you focus on this kind of discipline, then trust me, you're going somewhere. You're going to find yourself in a good spot in your trading journey. Well, so that's that for the market review. Now we're going to be talking about our weekly forecast. Okay, so stay tuned. Okay, guys, welcome back. So this is dollar index. So I don't know if you've forgotten, but as our custom is, we always start our forecast from dollars. We want to see what dollars is doing first, then we can tell what the rest of the coin could be doing. Like it's always inversely proportional to its quote pairs, right? So this is dollar, and this is the daily time frame. So if you go to the weekly time frame, you have a clear view of where dollar is heading to and what it's already done before. So if you look at this, right, I think we've talked about this source of liquidity for a very long time. Where I narrated that I expected price to take this source of liquidity. I don't know if you remember, like 4 months ago when we were still, we're still somewhere here. Just follow my cursor, right? We're still somewhere here. I was always narrating on the fact that I still want price to take out that source of liquidity because it's equal. It's equal lows. So price kind of prioritize this equal lows to single lows or single highs. Now if you look at where we are going to, you can see there's a favorable gap here on the daily time frame. So this is a favorable gap on the daily time frame for dollar index, and I want to see dollar index price into this favorable gap. Yes, that's how I draw my favorable gap, so you don't get confused. And if price trade into this favorable gap, I don't know what it's going to be doing from there. If it's going to be rejecting or if it's going to be going further. Of course, I'm not a bishop, I'm not a prophet, so I don't know what price will be doing from there. But once price get there, whatever it does, it's going to show, right? You're going to see it's going to give you a narrative of where, or a logic of where it's going to be heading to. Now, if you look at the daily time frame of Nasdaq, I think I dropped this analysis on the community a week ago, where I said on the daily time frame, it's just like on the weekly time frame or on the the monthly time frame, everything is the same. You expect price to what? Return back. If price is going for a higher time frame draw liquidity, now see price came for a higher time frame draw liquidity, like this equal low, right? And now it's heading for another higher time frame draw liquidity. Everything you expect is price returning to a draw liquidity, then keep going forward. This liquidity, like in case you don't know now, it's like a fill to the market, so it fills price. If you can check from here, price returning to take out this low before heading forward, price returning to take out this favorable gap before heading forward, price returning to take out this favorable gap before heading forward. Now in this case, price returns back to take out this what, this low before going forward. Now I'm expecting price to take out this high in the coming week, so that means for dollar index, as we open, we are going for the high, like upward till this high. I'm pricing into that weekly um, fair value gap. Okay, so I dropped these expectations on the Telegram community in case you're not in the Telegram community. So please check the description of this video. Very, very important. It's very, very important to always check the description of the video, right? Join the Telegram community from there, where I dropped this expectation that I want price to trade into this sell liquidity, then keep going forward to further price into the weekly fair value gap. And you can see it's already on that motive, right? It's already on that motive right now. So now this is what dollar is doing, right? Cram that. Yeah, I want you to cram that. Let's look at Euro USD. So you can see that this thing have a very, very serious correlations. Now let's look at the weekly time frame first. So if you look at this with hindsight, if you have a good hindsight, where is Euro USD coming from? You know, anytime you open your chart, the first thing you want to check, if you're looking for expectations, you want to find out the next draw liquidity, or where you should be taking the trade, if you should be buying or if you should be selling, or what should be your bias. The first thing you should ask yourself is, where is price coming from? Now write that on your journal. If you want to buy, if you want to sell, maybe a new day just open, you get, or you want to find out your bias. I'm going to elaborate more on this on the private class. So sorry for that, for those who are not going to be in the private class. But of course, I'm going to still talk about it here on this channel. But it's going to take a lot of time because I need those subscribers coming first. Okay. So the first question you ask yourself when you open to trade for a new day, write on your journal, is, where is price coming from? That's the first question mark. Now I want to figure out the bias of this pair, right? Now I need to ask myself, where is price coming from? That's the first question I ask myself. You can see price is coming from where? From this volume imbalance. You can see that these things are not just random. The price are reacting to each and all of these levels accordingly. Now price is coming from this volume imbalance, and I think 4 months ago, if I'm not mistaken, I remember talking about this sell side liquidity here, that I want price to come for this sell side liquidity. I don't know if anybody remembers, but you can go to the market review and forecast I did about 4 months ago. I think that should be around May or so. I talked about Euro USD coming for this sell side liquidity, and you can see it's already here. I'm not sure if your mentors told you, but I said it and it's here. Not that I'm the best, of course, I'm not the best, but I'm trying to tell you that my predictions or my bias, whatever, was right. Now, what I don't know is if price will reject from that side liquidity or if price will keep going further. I always tell my students these things. I don't know what price intentions is. I just want to see if price is doing it, then I follow. Now, if price gives me the motive of rejecting, you know what I mean. If price starts rejecting from that side liquidity, then yes, that is telling me that price is ready to reject from there. I cannot just assume without getting any evidence that price is going to reject from there. Okay, so let's see what Euro US is doing. You can see there's a slight fair value gap here. If you look at it very well on the weekly time frame, look at it very well. There's a slight fair value gap there. You can see. So price always coming to a drawn liquidity to go to its original course. Always doing this to go to its original course. You can see on the weekly time frame, after price reach out for here, just look at this price action very well. After price reach out to this drawn liquidity, we drop this CB, that's the sell side imbalance, buy side inefficiency, and this other week priced into it. Now if there's no fair value gap on the weekly time frame here, you can use the daily time frame to find out where the next drawn liquidity is going to be. That's all this retracement. Price tends to retrace to a drawn liquidity or a fair value gap or a CB or a BC, then keep going further downward. Now you know that its original course is here. Like this is where it's coming from. This is the external liquidity price is coming from. What do you need to do? You want, if you are picking swing trading setups, you want price to trade what into this fair value gaps before you sell. Now you want price to do what, to trade into this fair value gap before you sell. If there's no fair value gap on the weekly time frame, exactly what dollar index is doing, you go to the daily time frame and find any sell side liquidity or any buy side liquidity, expect price to do what, to trade into that and sell. Very very simple, but it's not easy once you start looking at it on the what, on live chart. Once you start printing, it's not easy. Now the same thing dollar is doing, but to the upside, is what euro is doing to the downside. You can see we have a short-term high here, and we also have that weekly fair value gap here. So I'm going to take this off right now. So you can see clearly what I'm trying to point out. You can see this short-term high, exactly what euro is doing, and what dollar is doing. So inverse of what dollar is doing is what euro is going to be doing. So price reached out for this high, take out that buy side liquidity, and keep going further downward. You can see that it always happens, brother. It always happens. Ladies and gentlemen, trust me, it always happens. After price reach for this, what? After price reach for this draw liquidity, you can see it leaves a fair value gap, trades into it, leaves another fair value gap, trades into it, leaves, and all of these zones are totally efficient, but it leaves what, a short-term high, relatively equal, takes out that short-term high, keep going further downward. All of these are efficient. What does it do? It leaves a short-term high. Now price will do what? Comes back for that short-term high, keep going downward. Price leaves a fair value gap here. This side is not efficient, it's inefficient. Now price does what? Price trades into that fair value gap. It does not need to take this high because there's an inefficiency. Now price keep going downward, leaves a short-term fair value gap there, trades into it and keep going further downward. Now in this case, there's no fair value gap. There's what? There's a high, just like there was a high here. Price does what? Trades into that high and keep going further downward. So this is how you pick your the market maker model. You just want that consolidation, the retracement, consolidation, retracement, just like the daily, the power of three, right? The manipulation and the distribution. So you want price to accumulate at the bottom, manipulate to the upside, like trick traders are as if it's going upside, you know. So some traders will be induced to buy, but it does what? Come downward until an external liquidity is taken. Price will keep doing that till onward. So that's how you pick and continue trends, right? One Once price takes out an external low or an external high or external liquidity, your continuation of trends ends there. So if price should come back for this next short-term low, then if I'm trading Euro USD, I'm not going to be looking for price to, you know, continue the trend. I'll be expecting price to either break a high, okay, to reject, or it could start continuing. You just need price to do what it does best first before you react. All right, so that's that for Euro USD. For those that are trading Euro USD, you've seen my expectations. I want price to take out this short-term low, so you can keep going further down. Now let's look at GBP USD. Okay, GBP USD, where are you? This is GBP USD, and funny, but it's like just the same thing I explained, just the same thing, almost the same thing. Now first I want to get the bias of GBP USD, right? Now what we ask ourselves is, this currency, where is it coming from? Where is price coming from? So if you check very well, if you're using good hindsight, you can see that price reacted to this fair value gap. Price reacted to that fair value gap, just like Euro USD reacted to what, a volume imbalance. Price reacted to that, and I think I mentioned this sell side liquidity 4 months ago too. It's been long, but I mentioned this sell side liquidity 4 months ago. I was like, okay, price is coming for this sell side liquidity, and some people that trades GBP USD was like, no, price is bullish, price is bullish, and just July we hit that fair value gap and we started rejecting. So these coming weeks, I'm still expecting, just like how Euro USD is going for an external liquidity, what I'm still expecting GBP USD to come for this external liquidity. But if you look closely, it's still doing the same continuation trend. like I just explained on Euro USD. CB trades back into CB, continues trades back into fair value gap, and so forth, so on and so forth. You can see price taking out this short-term high, just like how Euro USD is taking a short-term high, and how dollar is taking a short-term low. Price is doing exactly the same thing like them, so it's inversely proportional to dollars because they are quote pairs. Now, for those of you that are trading GBP USD, I think I've said enough on Euro USD for you to know my idea on GBP USD. I'm expecting price to come for this external liquidity. So until price takes out this short-term low, do not sell. Until price takes out the short-term low, do not sell. Price will keep going further downward. Takes out that short-term low. Possibly there's going to be a fair value gap. Price trades back into that fair value gap. You know what I'm talking about? Something like this. Price takes out that short-term low. Possibly there's a fair value gap. Price takes out that trades into that fair value gap and keep going further downward. And something like this. So this is a downtrend and whatever, but you can see why I don't use that downtrend narrative is that it's not always like that. You can see, yeah, some points there's a very straight line. So why are expecting a retracement? Price does not retrace. So some of you learned that a downtrend is always like this and like this. Like, no, not every time. A downtrend could be very straight sometimes, just like this. You can see, because there is no reason to retrace. All of this retracement, there's no reason to retrace, right? But once there's a reason to retrace, like there's a fair value gap or there's high, just like this, the price will retrace and keep going for that downward. So that's what I'm expecting on GBP USD, right? Now let's look at Nasdaq. So on the weekly time frame, Nasdaq is doing something very interesting. Now, first you ask, where is Nasdaq coming from? Well, that's simple because you can see this sell side liquidity. To me, it's a short-term sell side liquidity because I don't think Nasdaq will keep on going further downward. You can see the rest of the pairs, the rest of dollar put pairs are going down, are going downward. Dollar is going upward, so Nasdaq needs to act accordingly, whether early or late. It needs to act accordingly. Now, this is a weekly time frame fair value gap. This is a BC. This is where I want price. This is where I want to see Nasdaq in the coming weeks. So mark my words, in the next month or next 2 months, this is where I want to see Nasdaq. This sell liquidity is something short term because it's just falling price to what, to trade into a weekly what, a weekly fair value gap. I can see that. So first we figured out where price is coming from, then we figured out where price reached to, and we need to figure out where price is likely to go to next. This weekly this week that just passed ended as a what, an indecisional candle, because we are rejecting from a key area of rejection. That's a fair value gap or a CB, however you may call it. Now if you go to the daily time frame, you can see that price went further upward because there is a buy side liquidity there and also a slight fair value gap there. You can see all of these things are not random. Trust me, they are not random. They are not random. You can see this. So price reaching for that um buy side liquidity. Sorry, yes, price taking out that buy side liquidity like it did, as I showed you on the market review. Price took out that buy side liquidity on Wednesday, and also it was also reaching for what, a fair value gap. And you can see there's also a weak zone liquidity. And I thought about this weak zone liquidity. Once you see a daily time frame sweeping out the previous day low like this, that means price is going to be bearish till the next liquidity is targeted. So what's the next liquidity on Nasdaq? This relative equal lows. So I'm expecting Nasdaq to come for this relative equal lows. You can see that there. You can see those relative equal lows. That's my target for Nasdaq currently. So as we're selling, this is a weekly time frame, fair value gap, and we could use this as what, an inverse fair value gap later on, but we could not. It depends on what Nasdaq is going to be doing. But my overall idea, my overall bias for Nasdaq is to come for what, this sell liquidity, and also price into this weekly this weekly fair value gap, this weekly BC, buy side imbalance, sell side inefficiency. Now, all of this might sound very complicated, but it's very, very simple. Price came from where? From taking out this outside liquidity, reached out to where? Reached out to this by fair value gap. And where is the next place it's likely to go to? Outside liquidity. So we are bearish on the next week on Nasdaq. But first, you need to understand your Monday setup. It's very, very important. You need to follow your Monday setup. Then your Tuesday, you act accordingly. Wednesday, if there's any impact news like FOMC within the week, then it's best to avoid that particular day. The whole of that day, avoid it. London, New York, whatever, avoid it. Trade on days that is going to give you good expectancy. That's clean setups. Okay, so that is that for Nasdaq. Now I just want to do a little act of kindness. So most of you have been telling me to review or to forecast, to draw my forecast on Bitcoin and so on and so forth. So I'm going to be doing a little forecast on Bitcoin. Let's see what we should expect from that crypto coin, right? So this is what says Bitcoin. This is Bitcoin weekly time frame. Of course, there's no much price action there to use, so we'll be using at least the previous 90 days, right? So first you want to figure out where is Bitcoin coming from. As the first question you ask yourself whenever you want to figure out the bias of the coin. So what I see is price taking out this buy side liquidity. You can see that's very clear there. Price took out that buy side liquidity. And what are we heading for next? This fair value gap. But first, to get this to get a clearer picture of this, you need to go to the daily time frame. Okay. Now on the weekly time frame, it seems like price already traded into the fair value gap, but on the daily time frame, you can see the fair value gap is still unfilled. So that's my target for Bitcoin. I don't know what it's doing, if you're buying, if you're selling, whatever, but my target for Bitcoin is there, just at that's 24,000, whatever. That's 24,000. Yeah, it's my target for Bitcoin. It might sound confusing, but why will I make my target for Bitcoin? You can see this coin consolidate a lot, so it's not as clear as all these forex pairs. But if on the daily time frame you want to figure out where price is coming from again, you can see after taking out this external buy side liquidity, price traded into this fair value gap, and price also take out that buy side liquidity again. So after taking out buy side liquidity, where is your target? Look at this before you answer that question. You need to outline all of these reactions on the chart. You see, so price from this point rallied, taking out what a buy side liquidity. Then from there, what did it do? Takes out what a sell side liquidity. That's it has completed this course now. And the next thing, price leaves what a fair value gap. Price did what? Took out that fair value gap, but did not take out a buy side liquidity to complete the downtrend. So the downtrend here is not complete. Price stopped halfway in a weak zone, taking out the short-term buy side liquidity gain. What next do you expect? You expect price to reach for this, taking out the sell side liquidity. It's just simple logic. Once you understand this logic, you can understand everything. Once you understand this narrative of price, you can understand everything. Buy side liquidity and imbalance are everything on the chart you need. Just find out where price is coming from. Price first took out this buy side liquidity, okay? Took out the sell side liquidity. The next thing we took out what was this fair value gap, but did not complete the bearish trend after taking out the buy side liquidity. We stopped halfway on a weak zone and take out this short-term buy side liquidity. Some might call that inducement or whatever. What are we expecting next for price to reach for what this fair value gap? So in the next coming weeks might be very bloody for Bitcoin. You could see 24,000, 23,000 if so. So that's my prediction for Bitcoin. It's very, very simple to predict these things. And please know that all these bias and everything I'm talking about here has at least 60 to 70% win rate, at least from my track record. That is 60 to 70% win rate. Does not mean that because I said so, price is going to do so. Please understand that aspect. Does not mean that because I said so, price is going to do so. I'm not a prophet or anything. I'm just giving my own opinion, and you just learn from it. That's what you do, right? So thank you for tuning in. Thank you. I'm very, very grateful. The numbers I'm seeing, well, I'm not seeing yet, but I'm expecting a very good number. So thank you for not forgetting this channel. Thank you for tuning in, and until next time, be safe.